Hello and welcome to Business Incorporated. Many thanks for joining us. I am Bolaji Akinwale. Today on the program, the U.S. Federal Reserve's meeting holds this Friday. On tab is the interest rates decision. Also on the program, we'll take a look at Nigeria's role as the leader of the central banks in Africa. And South Africa's mobile phone company, MTN Group, is to sell 4% stake to black investors. Okay, let's begin by taking a look at the U.S. Federal Reserve's meeting that is expected to hold this week, and that the possibility of an interest rate hike has been mentioned by many analysts. Now, this indication was made, one of them, by the vice chairman of the U.S. Fed, Stanley Fischer. In a speech in Colorado, the Fed's number 2 policymaker noted that the Federal Reserve is close to hitting its targets for U.S. employment and 2% inflation. It did not mention interest rates in specific terms, but the remarks are likely to fuel debates about when they may rise. Mr. Fischer said this year's pace of jobs growth, although slower than in 2015, was more than enough for the labor market to continue to improve. It told a conference in Aspen that inflation outside of food and energy prices was within the hailing distance of 2%, the Fed's target rate. In recent years, it said that the U.S. economy had had to confront the Greek debt crisis, a rise in the strength of the dollar, and sporadic financial turbulence. Now to the market, starting from Asia, where the numbers mostly retreated on Monday, with traders likely holding their horses ahead of a speech from the Federal Reserve Chair, Janet Yellen, at Jackson Hole on Friday. In Australia, the ASX 200 closed down 0.21% at 5,515.10, erasing modest gains from the morning session, with the energy and material sectors shedding more than 1% each. South Korea's benchmark index, the Kospi, slipped 0.68% to 2,042.16. In Hong Kong, the Hang Seng fell 0.43% in the afternoon trade. Chinese mainland markets were also lower, with the Shanghai Composite closing down 0.75% at 3,084.76. The Shenzhen Composite dropped 1.27% to 2,018.65. Meanwhile, markets in Japan reversed the regional downward trend to finish up, likely boosted by a weaker yen and anticipation of further monetary policy actions from the Bank of Japan. The Nikkei 225 added 0.32% to 16,598.19. And in Europe, the markets were slightly higher on Monday as investors trod cautiously ahead of U.S. Federal Reserve's meeting this week, which could produce some hints about the timing of a further interest rate hike. Let's now join Avi Aguedas from the Frankfurt Stock Exchange. He is a DWTV Channel TV correspondent reporting live from the bourse over there. Good afternoon, Avi. You're welcome to the program. Now, the U.S. Fed's meeting at Jackson Hole will be a major factor for the markets this week. Fed Chief Janet Yellen is expected to make major pronouncements on the U.S. and, of course, the global economies. And Vice Chairman of the U.S. Fed, like I mentioned earlier on, Stanley Fischer, is reported to have hinted of the possibility of a rate hike anytime soon. How is the market in Europe trading on the first session of the week in relation to this meeting?
Well, the movements here have been, as you mentioned at the beginning, very cautious. Investors, of course, do not want to take any risks in this context because we simply do not know how the Fed is going to proceed. And even though we hear a voice now saying that it could be any time soon, we have heard other voices in the past essentially saying that we will not see it in September and that it could be towards the end of the year. So everyone knows that we'll see interest rate hike or interest rate hikes in the plural as well, but nobody knows when this is going to happen. And until then, until we have a little bit more certainty there, we will see some cautious investors not making that much of a big move. We are seeing the DAX, the main German index, down about 0.5 percentage point right now. So this is also a sign that even though no one is panicking yet, as we saw it in the past, well, the caution is advised at this point.
Now, Avi, how is the market receiving the news of the possible ChemChina's $43 billion takeover of Swiss agrochemical group Syngenta? We hear this has sent the shares of Syngenta up by over 12%. Is this likely to have a positive impact on other individual stocks this week?
It could have a positive impact on other agrochemical companies that are moving in the sector. Let's not forget that Syngenta is one of the leading makers of GMOs, or genetically modified organisms, and that brings us to a very important, let's say, side effect of this. The other story that is developing is the possible acquisition of U.S. agrochemical company Monsanto by the German giant Bayer. Let's not forget that Monsanto tried to acquire Syngenta. They failed at that attempt, and it was then that ChemChina came in and bought Syngenta. So it is very interesting because this further puts pressure on Bayer and Monsanto to consolidate. This whole agrochemical industry has been consolidating, has been concentrating, which means that companies have begun to merge in order to become bigger and to have fewer players in the market. And any company that is left behind in this process will probably have a very hard time coping with the new market developments. So if this agreement between ChemChina and Syngenta moves forward, that will put enormous pressure on Monsanto and on Bayer.
Now, as we count down to OPEC's meeting in September, there are concerns the oil cartel may not decide on supply freeze. What may be the likely impact on oil and gas stocks as investors are wary of oil gluts?
Well, that will certainly depend on how the global economy develops. The latest analysis that we are receiving are actually quite optimistic about how strong the economy is going to be moving worldwide towards the end of the year. And that would suggest that we will have a little bit more demand for oil. The prices have also stabilized. And there is one very important aspect here. Even though we saw everyone panicking at the beginning of the year due to the oil glut, what is true is that production levels right now are already at record highs. And the problem that we saw that time is still pretty much valid. If everyone is producing as much as they can, a freeze in the oil output is not going to change things necessarily, because everyone is already producing at maximum capacity. So the only thing that could actually bring a lot of calm to the oil market would be a reduction in production, but no country is willing to do that. So probably we will not see that much of a big impact if there was no decision on a freeze agreement between the oil-producing countries.
Okay, thank you so much, Avi Aguedas, DWTV Channel TV correspondent from the Frankfurt Stock Exchange. Okay, let's stick with the oil markets, where prices fell on Monday as analysts doubted upcoming producer talks will rein in oversupply, saying that Brent would likely fall back below $50 a barrel. Now, we're seeing that is also in line with August's more than 20% crude rally, and that figure seems to look overblown according to analysts. Now, soaring exports of refined products from China also pressured prices, as this was seen as the latest indicator of an ongoing global fuel glut, traders say. Now, China's July export of diesel and gasoline soared to 1.53 million tons and 970,000 tons each, putting pressure on refined products margins. Brent crude futures was trading at $50.22 per barrel in early trade, and analysts cast doubts on an August price rally, saying that much of it was a result of short covering and anticipation of upcoming producer talks to discuss means to curb oversupply. Okay, we'll go on a break. When we come back, we'll still have a lot to bring away here on Business Incorporated. Of course, topping that is Nigeria's role as the president of the African Central Banks. Please join us again.